Hello friends, welcome to my channel. This is CA Rakhi Agarwal. Today's topic is related to financial reporting on agriculture. That is Ind AS 41. We deal with financial reporting on agriculture. This standard is an asset-based standard, generally deals with biological asset. Biological asset means living plants and animals. So this standard generally deals with agriculture produce and biological assets. Previously, they in old accounting standard there is no such standard based on agriculture produce and biological asset, but in India's there is a new there is a standard which is based on agriculture produce and biological asset, because previously what the agriculture company do, they recognize their biological asset at a nominal value. If there is an increase in the biological asset due to if a cow gives birth to a calf, it's an increase in the biological asset. So if there is an increase in the biological asset, they will recognize at a nominal value. There is no such accounting standard basically for the agriculture produce and biological asset. But in India, there is a separate standard called Ind AS 41, which deals with the financial reporting on agriculture assets, agriculture produce and biological assets. So let's start our topic. We should continue with the content. Firstly, we discuss what we will study in this standard, what we will going to discuss in this standard. The standard says about the content, what is the objective and scope of this standard. The standard says about for what was the purpose of this standard. The purpose of this standard is to how to recognize, how to measure the biological asset, the agriculture produce, because it is an asset based standard. Previously there is no such standard based on agriculture produce and biological asset. And then we will discuss about some important definitions, like what are the agriculture activity, what do you mean by the biological asset, what is bearer plant, what do you mean by harvest. All these definition, important definition, we will study. We will get a brief knowledge of that uh, definitions. Then we will discuss about the recognition criteria, how we will recognize these biological assets in the financial statement, how the company will recognize these biological assets in the financial statement, what was the recognition criteria of the biological asset, then the measurement principles, what at what value these biological asset is to be recognized in the financial statement, what was the value of the biological asset in order to recognize in the financial statement. Then we will discuss what was the gain and losses arises due to the recognition of these assets, biological assets, what was the gain and how the losses is to be recognized in the books, in the financial statement. Then we will study about discuss about the government grants related to agriculture activity. We had previously studied the government grants in index 20, which deals with the government grants related to other than agriculture activity, but there's two government grant discussed in two index, like in index 20 and index 41. Index 41, that kind of grants which is related to agriculture activity, and other than agriculture activity, if the company receive any government grant, then that grant is dealt under index 20. Now, then we will discuss about disclosure. Disclosures of the agriculture activity in the how the company will disclose the agriculture activity in the financial statement. Firstly, we will discuss about the objectives of these standards. What is the objective of this standard? The objective of this standard is to prescribe the accounting treatment. Means to how the company will do the accounting treatment of the agricultural produce and biological asset in their financial statement. What was the recognition criteria? What was the measurement principles? At what value they will recognize? And how they will disclose these activities, agriculture activities in the financial statement. The objective of this standard is to deal with that kind of transactions, to deal with the agriculture activity, the transaction related to agriculture activities. So how the company will, how these standard uh, deals, what says the standard addresses the following critical issues. What was the issues they deals with? They generally says, when should a biological asset or agriculture produce be recognized on the financial statement, on the balance sheet? When should the company recognize biological asset? What do you mean by the biological asset? Biological asset we had discussed in India 16 also. Biological assets are two types of assets. Biological assets means living plants and animals, and agriculture produce means harvested product which we get from the biological asset, that is known as the agriculture produce. Like the it's a mango tree, and mango tree is a biological asset because biological assets is living plants and animals, and there are two types of biological assets, that is bearer and non-bearer. Bearer are those plants, bearer plants are those plants whose lives are more than 1 year, and that plants are deal under Indes 16 because it's a kind of asset, and other than bearer plants are whose life is less than 1 year. So, and the produce which we get from that plant, that animal, living animal, the milk which we get from the cow, the milk which we get from the cow, that is the agriculture produce. The mango which we get from the mango tree, that is the agriculture produce. Mango tree is a bearer plant, but the mango which we get from the mango tree is a agriculture produce. So how the agriculture produce is to be recognized in the financial statement? It says at what value, what were the measurement principles, what was the recognition criteria of biological assets and agriculture produce is to be measured at. Means at what value should recognize biological asset or agriculture produce be measured at, and how should the difference in the value of recognized biological asset or agriculture produce be accounted for between two different reporting dates? Means if the reporting dates are different, suppose how the change in fair value is to be recognized in the financial statement in two different reporting dates, and what were the key disclosures. This is the objective of this standard. Then we will know these standards shall be applied for the following when they relate to the agriculture activity. This standard applicable to the biological asset. Biological asset means all living animals and plants. Biological asset is of two types. Suppose those animals which is used by the owner in some events, like in some marriage ceremonies, in circus, or in horse race, that kind of animals which are used by the owner for the commercial purpose, then that asset, that biological animal or that biological asset is to be reported under Index 16, not under Index 41. But if the animal is used for the agriculture produce, like cow used for the agriculture produce, because cow gives us milk. So if the animal used for the agriculture produce, then that type of animals are recognized under NDS 41. Plants. In case of plants, if the plants is used for agriculture produce and that plant are of two types, like bearer plants and non-bearer plants. Bearer plants are those plants whose life is more than 1 year, and non-bearer plants are those plants whose life is less than 1 year. So bearer plants like mango plants, apple plants, coconut plant, sugarcane plant, rubber plant. These are the bearer plants whose lives are more than 1 year, and the produce which we get from that plant are the agriculture produce at the which deals under Ind AS 41. And non-bearer plants are those plants like wheat plant, maize plant, rice plant. These plants life is less than 1 year. So in 1 year we have to harvest these plants. These kind of plants are the biological asset. Then this standard deals with the agriculture produce at the point of harvest. Means the harvest means the output which we get from the biological asset, the milk which we get from the cow, the apple which we get from the apple tree, the mango which we get from mango tree, means the agriculture produce which we get from the biological asset at the point of harvest. Up to the point of harvest, we will recognize under these standards, under standard 41. And then government grants related to agriculture activity. What do you mean by the government grants related to activity? Any grant which the company receive for agriculture purpose from the government, then that grant is to be recognized under this standard. And that grant are also of two types. There is a conditional grant and non-conditional grant. So if the condition exists for that grant, if the company satisfied that condition, then only they will recognize that grant in their. And if unconditional grants are those grants of which there is no condition exists. This standard deals with this kind of like biological asset, agriculture produce at the point of harvest, up to the point of harvest. After that, there is another standard which deals with. And then the government grants related to agriculture. So in brief, we will just take a look. Like biological asset, there is a living animals. Biological asset means living animals and living plants. Living animals which are used for commercial activity, as I mentioned in my example, like if the owner of that animal use the animal for the purpose of events, for the purpose of the marriage ceremony, for the purpose of circus, for the purpose of uh, in horse race, then that animals are used for the commercial activity, and that animals are not recognized under Ind AS 41. They deals under Ind AS 16 because that asset is for commercial activity. They are asset for the company, and they generate profits for the company. And in the same way, an animal used for agriculture produce that are also asset for the company, but there is a separate standard for the agriculture activity, and that animals covered under that activities and covered under Ind AS 41. Means the milk which we get from cow, then that animals are covered under agriculture activity. Then living plants. There are two types of living plants, that is bearer and non-bearer. Bearer plants are those plants whose life is more than 1 year, which and then that plants are covered under Ind AS 16, and also in 40 that are investment. And non-bearer plants whose life is who produce agriculture produce within a year, means it takes less than 1 year to produce any agriculture produce, then that plants are covered under Ind AS 41. Then comes the scope. Scope means what is out of the purview of this standard. What does this standard does not applies to what kind of activities. Ind AS 41 does not applies to land related to agriculture activity. Even the land is related to agriculture activity, that land is not covered under Ind AS 41. The land is always covered under Ind AS 16 and Ind AS 40. Ind AS 16 deals with property, plant and equipments, and Ind AS 40 deals with investment property. Then bearer plants. As we have said, the life of the bearer plant is more than 1 year. It's a kind of asset for the company because the life of the plant is more than 1 year. There is a future economic benefit from that plant, and the value is reliable, cost is reliable. So it is treated under Ind AS 16 and not under Ind AS 41. However, the agriculture produce which we generate from that bearer plant are covered under Ind AS 41. So bearer plant does not covered under Ind AS 41, but the produce which we get from the bearer plant are covered under Ind AS 41. Means the mango plant is not covered under 41, but the mango which we get from mango plants are covered under Ind AS 41. Government grants. Government grants related to bearer plant means any government grant which is related to the bearer plant. Because if the bearer plants are not covered under Ind AS 41, how the government grant will covered? The government grant related to bearer plant are also out of the purview of this standard, and these grants are covered under Ind AS 20. Intangible assets related to agriculture activity means any intangible assets like any technical works related to agriculture activity is also not covered under the standard. There is a separate standard for that, that is Ind AS 38. Right of use assets related to lease of land related to agriculture activity means any, if a owner had cultivated any agriculture plant on the leasehold land, then that land is also not covered under Ind AS 41. There is a separate standard for leasehold property that is covered under Ind AS 116. Like for example, if the owner of in a tea garden, suppose the tea is manufacturing, the tea plants are manufactured, but the land is not a freehold land, and the produce which we get is the owner's property, but the land is not the owner property on which the tea is generated. Agriculture produce is covered under Ind AS 41, but the leasehold land is not covered under Ind AS 41. There is a separate standard for that, that is Ind AS 116. Note, agriculture produce after harvest means up to the point of harvest, it deals under Ind AS 41, but after harvesting that agriculture produce, it goes to the cold storage and they warehouse, then it goes to the warehouse, and there is a separate counting for that, separate standard for that in order to recognize that produce. But up to the point of harvest, it deals under Ind AS 41, but after that it deals under a separate standard is there, like inventory, Ind AS 2 or any other standard which is applicable to that. For example, Ind AS 16. Now, examples of biological assets agriculture produce and produce that are results of processing after harvest. Means example of biological asset, the agriculture produce which we get from the biological asset, and the resulting product after processing that harvested product. Suppose there is a dairy cattle. Dairy cattle means like cow, goat, from which we get, we agriculture produce from that, we will get the milk from that, and from that milk what the product generate, the cheese will generate from that, the curd will generate from that, the sweets will get generated from that, the chocolate will generate from that. So milk, from milk we will get the multiple products. So biological asset is the dairy cattle, the agriculture produce which we get from dairy cattle are milk, and the ultimate product will be the many products are there. We are given the example of cheese. Suppose sugarcane. Sugarcane is also a bearer plant. The life of the plant is more than 1 year. From where what we get? The harvested cane. From that cane, what the product generate? Sugar generate from the harvested cane. Tea bushes. Tea bushes is also a bearer plant. The life of the tea bushes are more than 1 year. And from tea bushes, what we get? The pig leaves, the tea leaves from which the tea is to be produced. Trees in a timber plantation. Suppose there is a long trees like bamboo trees are there, and these trees are not a bearer plant. Trees in a timber plantation, Suppose they fell down. When they fell down, they become a log, and that fell logs is used for making a lumber, is used in making the furnitures, is used in the logs which is used to make the lumbers, and lumbers is used to making the furniture. Trees in a timber plantation, after their cessation, they are no more of use, so they are not a bearer. Grapevines, from where the grapes is to be generated, from where the grapes is to be detached, and from there, from grapevines, the agriculture produce will be the pig grapes, and from there wine is to be the ultimate product. The produce process, after processing, the wine is to be generated. Then from sheep, the company will make out a wool, breed an wool from the sheep, and makes a carpet, makes a yarn from the wool. Tobacco plant is, from that, it's also a bearer plant. The life of the tobacco plant is more than 1 year, and the tobacco plant is all from that the pig leaves, the cured tobacco is to be generated, and from rubber tree latex is the harvested latex. From that rubber product is to be produced. So these are the examples. Some more examples are coconut tree, some more examples are mango tree, from where mango is to be generated from coconut tree. Coconut is to be generated from that, coconut oil is to be made from mango juice, pickles, all these things are generated. Then some important definition. Biological asset. As we discussed, biological asset means living animals and plants. All living animals and plants are known as the biological asset. Agriculture produce. Agriculture produce is defined as the harvested produce of the entity's biology. From tea garden, we picked up the tea leaves. That tea leaves is considered as an agriculture produce. Coffee leaves. Coffee leaves are covered under agriculture produce. From mango tree, we get the mango. That mango are covered as a agriculture produce. From apple tree, we get the apple. That apple is treated as agriculture produce. From rubber, we will get the rubber latex. That rubber latex is treated as an agriculture produce. So up to the point of harvest, that products are treated as an agriculture produce. Harvest means, harvest is the detachment of the produce from biological. Separation of agriculture produce from the biological means detachment of produce, agriculture produce from the biological asset. Harvest is that, means cutting of that, separating that produce from the biological. Means suppose the farmers have harvested a rice crop, wheat crop, then that crop is harvested within 3 months and 4 months. So that harvesting, up to the point of harvesting, that is to be treated under Ind AS 41. When they detach, then when they cut that harvested rice or crop, harvested. And cessation of biological assets life process means, take a bamboo plant, when they cut into logs, their life is no more. They become cease to exist as a biological asset. The life process comes to an end of that plant, because the plant is cut into various logs in order to make lumber from that. So the life of that asset is, the life process of that asset is no more exist. Now the definition of agriculture activity. What do you mean by the definition of agriculture activity? Agriculture activity involves biological transformation and harvest of the biological asset. Means agriculture activity means biological transformation. Biological transformation means mature. If the small tree becomes a big tree, if the small plant become a big plant, it's a biological transformation. If the calf become a cow, it's a biological transformation. And harvest of biological asset. When a small tree is become a big tree and we get fruit from that tree, then that's a harvest of biological asset. If a calf become a cow and we get milk from that cow, then that becomes a harvest of biological asset. Biological transformation means maturing of that biological asset, and harvest means getting produce from that biological. If agriculture activity involves biological transformation and harvest of biological asset for sale, for the purpose of sale, then that activity is covered. For the conversion into agriculture produce means if that biological asset is converted into an agriculture produce, like we get fruits from mango tree, milk from cow, and conversion into additional biological asset, like if one plant generates many plants, one cow gives birth to a cow, one horse gives a foal. So that's a conversion into additional biological asset. Agriculture activity covers a diverse range of activities. Diverse range of activities means annual or perennial cropping, means annually they crop the agricultural activities, or perennially cropping, raising livestock. We know forestry is like planting of various trees in some areas, cultivating orchards and plantations, floriculture and aquaculture, fisheries. These are the agriculture activities. Floriculture means plantation of various flowers, aquaculture, fishing activities, cultivation of orchards and plantations of various trees like mango trees. Now, definition of biological transformation. What do you mean by the biological transformation? As I say, as we had discussed, biological transformation means which comprise of, suppose there is a growth, means a baby, suppose a calf become a cow, it's a growth of that animal. A 2 year animal, 2 year cow become a 3 years old, now it's a growth for that animal. Degeneration means the life of the cow is do no more, the cow is dead, so it's become a degeneration. Production means the output which we get from that cow, that is the milk which we get from that cow. And procreation means a cow gives the birth to a baby. So biological transformation comprise the process of growth, degeneration, production and procreation that cause qualitative and quantitative changes in the biological asset. Qualitative means the growth of that cow and calf, and quantitative means the number will be increased, means the cow gives birth to a baby calf, so number will increase, and if the calf become a cow, then it will be a qualitative change. Biological transformation causing qualitative and quantitative changes in the biological asset, that becomes the growth. Growth means increase in quantity or improvement in quality of animals or plants. Degeneration means decrease in the quantity or deterioration in the quality of animals or plants. Means if the animal become is no more exist, if the animal is dead, the plant is dead. Production means from that animal or plant we get the produce, like we get from wool from sheep, we get milk from cow, we get mango from mango plant, we get apple from apple plant, we get coconut from coconut plant, we get coffee from coffee bushes, we get tea from tea bushes. So these are the productions. And procreation means creation of additional living animals and plants, like from one cow we get the baby cow. These are the procreation process. From one tree we get the many multiple trees. So these are the additionals. And additionals, previously how we will recognize in the books additional animals and plants, we will recognize in nominal value. But now there is a separate standard for recognition of that additional plants and animals, that biological asset. Definition of bearer plants. Bearer plants is a living plant. Here is a definition of bearer plants are those plants whose life is more than 1 year. Expected to bear agriculture produce for more than one period, and it is used in the production or supply of agriculture produce. Means we get agriculture produce from bearer plant. The life of the bearer plant is more than one period and has a remote likelihood of being sold as agriculture produce except for incidental scrap. For example, tea bushes, which we get tea bushes life is more than 1 year. Rubber tree life is more than 1 year. Coconut tree, palm tree, grapevines. However, the produce which we get from these plants is a biological asset. Is also a biological asset. These plants are bearer plants. This is also a biological asset which is covered under Ind AS 16. But the produce which we get from these plants are covered under Ind AS 41. Now, the definition of fair value means it is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between the market participants at a measurement date. What they will pay for that kind of good, the market participants are ready to pay for that kind of good, is the fair definition of fair value. In detail, we will study in Ind AS 113. Now, cost to sell means cost to sales are the incremental cost that is directly attributable to the disposable of an asset, excluding finance cost and income. Means cost to sell means fair value less cost to sell, we will recognize the biological asset. But what do you mean by cost to sell? If any expense we incur to bring that asset for the purpose of selling that asset, then that biological asset, then that cost is to be treated as a cost to sell. Means any incremental cost which is directly attributable to the disposal of biological asset. Means transportation cost which is incurred for bringing that asset, biological asset. Mango is suppose there are 100 kgs of mango, and for that mangoes there is a transportation cost of 500. Suppose 100 kg of mango, the fair value of that mango is 50 rupees per kg. So in total there will 5,000 rupees, and the cost transportation cost around 500 rupees. So that cost, that incremental cost is to be treated as a cost to sell. Now we will discuss one case study. Suppose A Limited grow mango plants. A Limited grow many mango plants and harvest the mangoes and produce pickle from that mango. The A Limited work is to grow, they grow mango plants and they harvest that mangoes from that mango plant and produce pickle from that mango. Which of these activities are in the scope of Ind AS 40? The mango plants are the bearer plants that continually generate mangoes because the life of the mango plants are more than 1 year. So these plants are covered under Ind AS 16 as a property, plant and equipment. When the entity harvests that mangoes from that biological asset, their biological transformation ceases. Means when they harvest the mangoes from the biological plant, from the mango plant, their biological transformation cease and they become an agriculture produce, and that agriculture produce covered under Ind AS 40. And mango pickle, which involves the 2-3 months process, maturation process period. This process is similar to the conversion of raw material to finished products rather than biological transformation. Hence treated as inventory in accordance with mango plants are the bearer plant, and they are covered under Ind AS 16 as a property, plant and equipment. But the produce which we get from the that plant up to the point of harvest is to be treated under Ind AS 41, and after that when it become a mango pickle, and then it will be treated under Ind AS 2, and that is inventory. Means up to the point of harvest it will be treated under 41. When it goes to the cold storage or warehouse, then it will be covered under other standard like in Ind AS 2 or any other. For recognition purpose, for recognition of biological asset, there are following criteria which is required to be fulfilled. Then only the company will recognize these assets as a biological assets in the financial statement. First, they will check that there is a probability that the future economic benefit generate will flow to the entity. If the asset does not have any future economic benefit, then it will not be recognized in the balance sheet, the financial statement of the entity. So we will check that the future economic benefit will flow to the entity for recognition purpose. Fair value and cost can be measured reliably. An entity should control that asset. Suppose we will take the example of a street cow. Street cow gives us a milk. Okay. There is a future economic benefit from that cow. Cost can be measured reliably for that cow, but the owner cannot control that cow because there is no controlling power of to that cow. For recognition purpose, the condition will be the probably future economic benefit will flow to the entity. Fair value and cost can be measured reliably, and entity should control that asset. If there is no control, then there is no recognition. So these three conditions is to be fulfilled. Now measurement principles, biological asset and agriculture produce. In case of biological asset, shall be measured at fair value less cost to sell. On initial recognition. On initial recognition, they will recognize these assets as fair value less cost to sell. As I had taken the example of mango, that is 5,000 less cost to sell 500, we will recognize that as a 4,500 at each reporting period. At the end of each reporting period on initial recognition. On subsequently, they will recognize if there is a change in their fair value. Like for example, in biological asset, there is an initial recognition also and subsequent recognition also. Like for example, if a cow gives birth to a calf, then measure that is fair value minus cost to sale. Cow gives a birth to calf, then the fair value of that calf is to be recognized. And suppose the calf, the date of the birth of calf is 1st October, and the reporting on that date, the value of fair value of that calf is suppose 1,000 rupees. But at the reporting date, the fair value of that calf will increase to 1,300 rupees. So it becomes increase in the value of the calf. So they will recognize 300 on the reporting date. So change in the fair value is also recognized. That is the subsequent measurements. And at the initial measurements, they will recognize at rupees 1,000 at the time of purchase. And agriculture produce means agriculture produce only at that point of harvest they will recognize. There is no subsequent measurement for that. There is only the initial measurement, that is at the point of harvest. Measured at fair value less cost to sell at the point it is harvested from the entity's biological asset. For example, apple tree. An apple is plucked from apple tree. That apple become an agriculture produce as per Ind AS 41 up to the point of harvest. After that, it will be accounted by other standard, that is Ind AS 2 or any other standard. The fair value measurements of agriculture produce at the point of harvest is the cost of produce for subsequent accounting standard as per Ind AS 2 or other applicable. At the point of harvest, they will measure as per Ind AS 41, but after that, they will measure by the other standards. There is a reporting of gains and losses. How the company will report if there is a gain or losses in the biological asset. When the biological asset is first recognized at fair value less cost to sell. Means what was the value of the biological asset minus cost to sell. Then they will always recognize at a loss. Any gain and loss is to be recognized in the profit and loss account. This is to be explained by example. Suppose the company has purchased a horse for rupees 10,000 on 1st April 2022. The cost to sell or the transportation cost of the horse is 500. How the company will recognize this biological asset in its books? At the initial measurement means fair value less cost to sell. Fair value of the horse is 10,000 and cost to sell is 500. So they will recognize at 9,500. The journal entry will be biological asset, that is horse account debit. They will create a biological asset in their books 9,500 and they will pay for that 10,000. So there is a loss on initial recognition will be 500. and that loss they will also pass an entry to the PL account, that is transportation cost for purchase of that horse, that is 500 to cash. So this is the journal entry they pass on initial recognition when they purchase any biological asset, and if there is any cost incurred, then that cost is always treated as a loss. Now a loss can arise due to requirement to deduct the cost to sell. These losses arises due to requirement to deduct the cost to sell. A gain can also arise when a biological asset is first recognized following a birth of a foal. Means loss can arise when there is a deduct due to cost to sell, and gain when arise when they gives, if a cow gives birth to a calf or a horse give birth to a foal, then because there is no cost incurred for that, that is a gain for the company. The horse has given birth to a foal, then the fair value minus cost to sell of that horse is, that foal is 5,000. Initial measurement will be at gain because there is no fair value minus cost to sell, that is biological asset foal account debit, that is 5,000 to other income. This is to be, this is an income, like we invest any shares, any money on shares, and we get the dividend, that kind of transaction. Gain and losses will also arise over the life of the biological asset to reflect the changes, and there is also a gain or loss over the life of the biological asset if there is a change in the fair value less cost to sell at the end of the reporting, each reporting period. These gains and losses will be reported in the profit and loss in the period in which they arise. Suppose in 31st October 21, the life of the horse is 5 years, and on 22 the life of the horse is 6 years. So there is a transformation, biological transformation, and also the growth is there, and the cost is also increased, the fair value of that horse is also increased, so it's become a, and that difference is to be recognized as a other income in the book. As on 31st March 20, the fair value less cost to sell becomes 9,800, because previously the fair value of horse is 9,500, it increased to 9,800, so the 300 is to be increased from 9,500, so it will be recognized as a biological asset, 300 to other income. The differential amount is to be recognized as other income. And there is reversal also. There is suppose the fair value of the asset also decrease, then it becomes a loss. Give a summary of that gains and losses from biological asset. Gains or losses on initial recognition. A loss may arise because cost to sell are deducted in determining the fair value less cost to sell. Means gain or losses on initial recognition, we recognize at fair value less cost to sell, and there may be there is chance of losses only because a cost is to be deducted from the fair value. If there is a change in the fair value less cost to sell on the reporting date, if the price of that, suppose 9,500 is increased to 9,800, there is a change in the fair value on the reporting date, then that there is a gain, there is a chance of gain. The gain may arises on the reproduction, if there is a reproduction or regeneration, like when a calf is born. From agriculture produce, gain or losses on initial only on initial recognition we will recognize on agriculture produce. There is no subsequent measurements for agriculture produce. For biological asset, there is a initial measurements and also the subsequent measurement. But for agriculture produce, there is only an initial measurements on which the company will recognize at the up to the point of harvest. A gain or loss may arise on initial recognition of agriculture produce as a resulting of harvest, and this is taken to the PL for the period in which they are. Now the government grants. Government grants for biological assets. They are measured, they are also measured at fair value less cost to sell, and there is a two grants are there if they are measured at fair value less cost to sell, and if they are measured at cost. What kind of assets are measured at fair value? Those who are the non-bearer plants, those who are the agriculture produce. And if the company get government grants for that, then that is to be treated under Ind AS 41. But if there are bearer plants and the company will get grants for that bearer plants that are measured at cost, and that is to be recognized under Ind AS 20. And then if the government grant is related to agriculture activity, which are covered under Ind AS 41, and if the grant is conditional grant, if there is a condition that government has said that I will give you a grant subject to the condition, if you fulfill that condition, then only you will recognize that grant in your books. Otherwise, if you will not fulfill the condition, you have to refund that grants in to the government. When the condition meet, recognize the grant in the PL account. And unconditional grants are those grants which are there is no condition exist, then recognize that grant when it becomes a receivable. At the time of receivable, the company will recognize in the PL account if the grants are unconditional. Examples of conditional grant: suppose Annapurna Agro Industries cultivated a huge plot of land. The government offer a grant of 10 crores under the condition that the land is being cultivated for 5 years. If the land is cultivated for shorter than 5 years, the entity required to refund the entire grant to the government. So there is a condition exist that the company has to cultivate that land for a period of 5 years. If they will not cultivate, then the grant which is given by the government to the Annapurna Agro Industries of rupees 10 crore, they has to return to the entire grant to the government. Therefore, the government grant will be recognized as income only after 5 years of cultivation. The situation would be different if the returning obligation refers to the year of non-cultivating the land in respect to the retention of grant for the period till which the entity has cultivated the land. Means the situation will also be different if the company is allowed to book the grant on pro rata basis. The amount of 10 crore would be recognized as income proportionately with the time period, meaning 2 crores each. Now we will just take a brief in which we will discuss one case study in which the whole concept of these standard is to be covered, like Mothers Limited prepare financial statement 31st March each year. On 1st April 2022, the company carry out the following transaction. The company has purchased a land of 50 lakhs, purchased a 400 dairy cow. The average age on 1st April 2022 will be 2 years for rupees 8 lakhs. Means they purchase a land at rupees 50 lakhs. They purchase a 400 dairy cow whose life is 2 years for rupees 8 lakhs, receive a grant from the government of 1 million towards acquisition of the cow. The grant is non-refundable. And the company has also incurred some cost as on 31st March 23, rupees 6 lakhs to maintain the condition of the animal like food and protection, and 4 lakhs for breeding fees to the local farmers. On 1st October 2022, 220 calves were born. On 1st October, there is 220 calves born from that 400 cows. There were no other changes in the number of cows during the year ended 31st March 2023. As of 31st March 2023, Mother Limited has 400 liters of unsold milk in the inventory. The milk was sold after the year end at the market price. Now there is some fair value informations related to fair value, like on 1st April 2022, the fair value less cost to sell on 1st October 2022 and 31st March 2023. That is land, the fair value of land as on 1st April 2022 will be 50 lakhs. As on 1st October 2020 it will be 60 lakhs, and 31st March 23 it becomes 70 lakhs. Newborn calves per calf 900, 1300, 1700. 6 months old calf 1700, 1800, 1900. 2 years old cow 2,000, 2,200 and 2,700. 3 years old cow 2,100, 2,300, 20. Milk per liter 48, 49, 50. Prepare extract from balance sheet and statement of profit and that would be reflected in the financial statement of the entity for the year ended 31st March 2023. So we have to prepare balance sheet extract and also the PL extract from these information. We will prepare the solution. We will first prepare the balance sheet extract as on 31st March 2023. That is asset. That is we have a land. So property, plant and equipment, land is always covered under Ind AS 16. So it will be covered. It will be at 50 lakhs. And the biological assets are cow whose life is 2 years as of when they were purchased, and we are preparing the balance sheet of 31st March 2023. So it becomes almost 1 year ago. Now it becomes 3 years old cow. Now calf is born on 1st October 22. Now it becomes 31st March 2023. So it becomes 6 months old. So 6 months old calf and 3 years old cow. So we will calculate in this way. Inventory, there are unsold inventories like milk, unsold milk 4,000 liters are there in books and which will be sold after the reporting period. And then we will make a PL extract, income from newborn calves, government grant, fair value change. We will just make, firstly we will discuss via working note. 1st October 2022, the value of calf. There is a, how many calves are there? There are 220 calves are there. In our example, there are 220 calves are there. Calves are there and the fair value as on 1st October when they born. When they born, the fair value of the calves are 1,300. 1,300 is the fair value of the calf. We will book in that value, that is 1,300 into 220. That is biological asset calf account debit to other income because they are the calves. So we will recognize them at to other income. And then we will calculate as on reporting date the value of the calf is to be increased from they become 6 months old calf, not a newborn calf. They are 6 month old calf as on 31st 3 2023, and that date the fair value of that calf become 1,900. So we will recognize on the differential amount, that is 1,300 minus 1,900, that is 600 into 220, where biological asset account debit, that is 1,32,000 to other income. Then we will recognize government grant which we receive from for the acquisition of cow, that is bank account debit 10 lakhs to government grant, which will also goes to other income. Then we will calculate the value of cow as on 1st April 2022 at the time of purchase, that is 8 lakhs the value of the cow. Number of cow is 400, so per cow is becomes 2,000. The closing value as on 31st March, that is 2 years cow becomes 3 years cow, and that time the fair value of that cow becomes 2,800. So at the time of initial recognition, biological asset cow, that is 8 lakhs to bank account, and on subsequent recognition, that is on reporting date 31st March 2023, the biological asset we will recognize at a differential value, that is 400 into 400, that is 3 lakhs 20,000. So in this way we will calculate the working and then we will recognize in PL and also in. Now we will calculate, we will recognize the income from newborn calf. How much? The newborn calf, that is 2,86,000 plus 1,32,000, that is 4,18,000. Then we will recognize this as a other income in PL, that is 10 lakhs government grant. 10 lakhs is the government grant. Fair value change in cow, because the change due to the fair value on the reporting date, that is 3,20,000. The maintenance expense is also there for 6 lakhs and breeding fees is also there. And also we will put the in balance sheet also property, plant, equipment, that is we know that 50 lakhs is the value of fair value as on, and 3 years cow old cow we will calculate here like 8 lakhs plus 3 lakhs 20,000 change in due to the fair value. So 11 lakh 20,000 will be the fair value of the cow, which we will recognize in balance sheet, and the calf value is also increased like 2 lakh 86 plus 132, 4 lakh 18,000, and the inventory is 4,000. In 4,000 unsold milk is there, and the value of unsold milk is 50 rupees. So 4,000 into 50, that becomes 2 lakhs. So journal entry will be agriculture produce to other income, and it becomes inventory as on 31st March. That is inventory to agriculture produce. It will be recognized in PL as milk and also in balance sheet as inventory. Milk 2 lakhs, and in balance sheet it will recognize as an inventory 2 lakhs. So total becomes 67 lakhs 38,000, and in PL there will be income minus expense, it becomes 9 lakh 38,000 will be the total. So this is the whole brief of case study related to this standard, the whole concept of this standard. And now the disclosure part. Biological assets should be separately presented in the financial statement. It should be separately disclosed in the financial description of biological activities and the assets. The description of each biological assets is in narrative or quantitative form between the consumables and bearer plant. There is a separately, they will disclose all the biological assets, all the consumables and non-consumables. Those are the bearers, those are the agriculture produce, those are matured and immatured. Nature of entities, activity involving. Each group of what kind of activity they are involved in. If there is a gain or loss, should be recognized. What gain and loss the company will recognize at the time of initial recognition and at the time of subsequent recognition. They should disclose. Then reconciliation of change in carrying amount of the biological asset. They should reconcile. They make a gist to reconcile the change in the carrying amount of biological asset between at the beginning or at the end of the reporting period. There is a restricted asset commitment and risk management strategies. Government grant. If they receive any government grant, nature and extent of government grant recognized. What kind of nature, what was the nature of the government grant, up to what extent they will recognize. If the condition is not fulfilled, what was the contingencies attached to that grant. What are the liabilities attached to that grant is to be disclosed. Then additional disclosures when fair value cannot be measured reliably. Description of biological asset, explanation why fair value cannot be measured reliably, estimates within which fair value is likely to lie, and gross carrying amount, accumulated depreciation and impairment loss at the beginning and at the end of the reporting period. So these are the disclosure requirement of these standards. If you like, please subscribe my channel. Please share my channel. Thanking you for watching my channel.